in Dow 10,000.
The Dow Jones Industrial Average dropped more than 900 points.
Forget the recession. Charlie Munger sees something far scarier on the horizon. The legendary investor warns that what's coming next could make a recession seem mild. In this video, we'll break down Munger's alarming prediction.
And we don't know how bad the troubles will be, whether we're going to be like Japan or something a lot worse. And when you print money on the scale that modern nations are printing it,
And what it means for the future of our economy. Stay tuned. Welcome to the channel. Today, we're unpacking Charlie Munger's urgent warning about a looming economic disaster. With global money printing out of control, this crisis threatens more than just markets. It could destabilize economies, democracy, and society itself. Let's dive in. The risk of excessive money printing. Charlie Munger isn't just worried about a recession, he's sounding the alarm on the dangers of excessive money printing. Let's be real, printing more money sounds like an easy fix, right? Wrong. Munger's warning is rooted in history, where countries like the Weimar Republic and Latin American nations collapsed after going down this dangerous path. It may look like a quick way to pay off debt, but it's like putting a band-aid on a deep wound. It won't end well. Now remember Paul Volcker? Back in the 70s, he raised interest rates to a whopping 20% to stop inflation. It worked, but it hurt a lot. Munger questions if today's politicians would have the guts to make such tough calls. The temptation to just print more money and avoid the pain is strong. But Munger says, the troubles that come to us could be worse than what Volcker was dealing with. Yikes! But it doesn't stop there. Munger goes a step further, drawing from Plato's lesson that democracies can slip into tyranny when leaders promise too much. Sound familiar? He sees a connection between unchecked money printing and the rise of authoritarian leaders like the strongmen we've seen in some Latin American countries. In other words, if politicians keep printing money without facing the consequences, our democracy could be in serious trouble. Let's hope they're paying attention. Crazy stuff, right? Japan's example, are we heading there or worse? Charlie Munger points to Japan as a cautionary tale, but with a twist. Japan has been printing money like there's no tomorrow for years, yet it remains stable and civilized. So, is Japan some kind of economic unicorn? Or is it just delaying the inevitable? Munger's got us wondering.
nobody knows how much of this money printing we can do. And of course, we have politicians who and are in both parties, who like to believe that it doesn't matter how much you do.
Could the US pull off the same trick? Or are we heading for something far worse? Here's where things get tricky. The idea of paying off debt by issuing non-interest-bearing accounts sounds like a sweet deal, doesn't it? Politicians love it. Who wouldn't want to get rid of those pesky interest payments? But Munger reminds us this is just a temporary band-aid with serious long-term risks. As he puts it, think of how seductive it is for a bunch of legislators to get rid of interest payments. Sounds tempting, but it's a trap.
People in Japan didn't experience wage growth and inflation for about 3 decades. That means 1 generation for people.
Munger isn't so sure the US has the discipline that Japan has shown. While Japan has managed to hold things together, Munger fears we might not be as lucky. If we don't handle this carefully, he predicts we could face social and economic turmoil that could rock our stability. Let's hope we're not heading down that road. Passive investing, a new emperor in town. Charlie Munger isn't a fan of passive investing, and he's not shy about it. Index funds, led by giants like BlackRock and Vanguard, have changed the stock market in ways we're still figuring out. Munger calls these firms the new emperors of Wall Street. And guess what? He's not optimistic. As Munger bluntly puts it, we have a new bunch of emperors, and I predict it will not be good. Ominous, right? The problem? These passive fund managers now control huge chunks of the market, which gives them a lot of voting power. But here's the catch. They're not actively managing these stocks. So, who's really steering the ship? And what happens when the market takes a downturn? Munger worries that this concentration of power could lead to some pretty nasty consequences. Munger draws a comparison to the Nifty 50 stocks of the 1970s. Back then, a group of stocks soared to ridiculous heights because everyone was buying them, only to come crashing down when reality set in. Sound familiar? Munger's takeaway: when too much power is in too few hands and everyone's following the crowd, it creates a self-perpetuating risk that could eventually disrupt the market in a big way. It's a risk we can't afford to ignore. Technological disruption. Progress with consequences. Technological progress has brought undeniable advancements, but it comes with trade-offs. Munger highlights that automation and robotics are inevitable in industries, displacing human jobs in the process. He draws a parallel with Kodak, once a giant in the photography world, which became obsolete due to rapid technological shifts. While automation boosts productivity, it also widens the gap between the wealthy and the rest. The result? Increased wealth inequality, where the benefits primarily go to those with capital, leaving workers in a vulnerable position. As Munger notes, progress comes at a cost, and we must be prepared for these challenges. Munger's investment strategy. Charlie Munger's take on investing is refreshingly direct. Don't sit on cash waiting for the perfect moment. He believes the best time to invest is now, as holding out for better conditions often leads to missed opportunities. His famous words, "In my whole adult life, I've never hoarded cash," say it all.
Oh, well, you're not talking to a great exiter. My Berkshire I bought in 1966. I've been a good picker, but other people know more about exiting. I'm trying never to have to exit.
Berkshire Hathaway's current strategy reflects this mindset. Though they have cash reserves, they're cautious about investing at inflated prices. Munger stresses that no company, no matter how good, is worth buying if the price is wrong. Instead of over-diversifying, Munger advocates for fewer, smarter investments. He believes that focusing on a handful of solid bets leads to long-term success. If you're lucky, you'll have 4 good investments in your lifetime, he says. The key is quality, not quantity. Charlie Munger's parting advice is simple but powerful. He warns of tough times ahead, things like inflation, excessive money printing, and political turmoil. But here's the thing. Munger believes that managing expectations and being adaptable are the keys to navigating uncertain waters. As he says, the first rule of a happy life is low expectations and cope with reverses as they come. Despite the challenges, Munger remains optimistic. He believes that with the right mindset, we can weather the storm. Want to learn more about how to prepare for what's coming? Subscribe and stay updated with our latest insights.